TROW Price stock, ticker symbol TROW. This stock is up roughly 3% year to date, and it has gone up and down quite a bit so far. Most recently it came down roughly 10%. On the 7th of August, TROW presented quarter results where they beat on EPS and revenue. Analysts are very optimistic for the upcoming earnings. Most people love TROW stock because of the dividend, and I understand why, with dividend yields sitting at 4.34% and a great growth track record with 36 years of increasing the dividend. So could this be the perfect moment to buy TROW stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does TROW do? TROW Price provides asset management services for individual and institutional investors. It offers a broad range of no-load US and international stocks, hybrid, bond and money market funds. When we dive in the most recent earnings report, we see that assets under management was at 1.4 trillion, and increasing year over year and quarter over quarter. To me, this looks very good. Net revenue also increased quite decent, and EPS is growing alongside with it. So this looks really good to me. Dividends were increased a tiny bit as well, so that's also very nice. Assets under management are one of the most important metrics with this company. And in here we see that in 2021 they were at all-time highs. In 2022, when the stock market went down, the assets under management followed quite logically. Most recently in 2022 it's going up again, which is a good thing. When we check the asset class breakdown, we see that equity represents the biggest portion of the assets under management, followed by multi-assets. In the past couple of quarters we see that retail is picking up a larger share of the total sum in the client type breakdown. And in the third column we see that the geo breakdown, US is by far the biggest segment here. Another thing that I really like is the fact that operating margin is increasing again to 33% in the most recent quarter. In here we see that TROW loves to return capital to the stockholders through dividends and share repurchases, which is a good thing in my opinion. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. TROW is a 25 billion market cap company. PE ratio is at 16, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for TROW stock. So make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 6 billion, and in this graph we see that revenue went up nice and steady, but most recently it started to decrease a bit, which is caused by the market conditions. Margins were always going up with this company, but since their peak in late 2021 the margins were going down. The good part is that most recently it started to increase again. EPS is showing a similar trend, so I expect this number to increase quite steady from here. Analysts expect 2023 to be a tough year, which is quite logical with everything happening right now. After that, it is expected to return low to mid single digits. For the revenue it is a pretty similar pattern, and it's expected to see mid to high single digit growth in the coming years. Return on assets is sitting at 16%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 10%, which is still a great number. Unfortunately, it is lower than the 5-year average, so that is something to keep your eye on. But it has to be said that this is caused by the market conditions. Current ratio is at 3.2, which looks a bit on the high side. But it's also very common for these type of companies to have a higher number here, so it doesn't worry me that much. Right now TROW has 423 million in debt. I prefer companies that can pay on at least a big chunk of their total debt with the total cash. TROW has 2.2 billion in total cash, so they can pay off easily all their debt and still have some money left. This looks really good to me. But it's still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run at a steady and consistent pace most of the time. Shares outstanding are decreasing, which is a good thing. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.34%, which is a great number. Annual payout is at $4.88 and payout ratio is at 66%. I prefer 50% or lower, so right now they have 34% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 14%, which is a great number, and one of the reasons why I love this stock so much. On top of that, they increased the dividends for 36 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that TROW really likes to increase the dividends, which is very nice. In 2021 they paid an additional dividend, so keep that in mind. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio was kinda steady up until late 2021, when problems occur for TROW. Right now it is coming down again and I expect that in a couple of years it will be around 40% again. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare TROW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that TROW underperformed the S&P 500 big time. But before you draw any conclusions, keep in mind that TROW was beating the S&P 500 in 2021, when it really got some momentum. Late 2021 it started to come down when the overall market declined as well. It never fully recovered ever since. On the 1-year chart it looks pretty similar, with the S&P 500 returning 8% including dividends versus TROW returning minus 9% including dividends. On the 6-month chart it's the S&P 500 with the highest return again, 10% in total, beating TROW once more. On the 1-month chart it's a close call, with the S&P 500 returning nearly flat numbers and TROW returning minus 2%. So bottom line, the S&P 500 looked like the better choice in the past couple of years, but in 2021 and 2022 played a big role in the total returns for TROW. So, is this the perfect time to buy TROW stock? Well, let's check the 3 price tags that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 4 and 5% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 26, 28 and 30%. And for the free cash flow margin I'm putting in the same numbers. For the PE ratio and the price to free cash flow I'm filling in 17, 18 and 19. It's a big company that is still capable of growing in decent amounts. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now TROW stock is at $112. I hit analyze and we only see a few green numbers. We have a low price target of $93, which is a decent drop from the current stock price. We have a mid price target of $112, which is around the current stock price, and we have a high price target of $133. To me, the high price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion on this stock is that they are hammered down big time in terms of stock price, but also business wise. Revenue, free cash flow, assets under management all went down since late 2021. But right now they are recovering, and this might be the perfect moment to buy this stock since the company is recovering and the stock price doesn't go anywhere right now. I did increase my total shares not too long ago at similar prices, and I'm planning to buy even more shares in the coming months. For me, it is the perfect dividend growth stock that is steady and consistent. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.